Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, November 7th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we got some red on the screen in the U.S. equity markets. We got the dollar index pushing and making new lows. We got gold futures and all the precious metals here pushing on up with a lot of green across the board there. Looking at the gold market, sitting at 40.15, staying above that 4,000 mark. Dipped below it briefly down to 39.81 with a high of 40.22. So we're up about 0.5% here as of this recording. The market is in a tighter trading range with only about a $40 fluctuation overnight. It's down 2 out of the past 3 trading sessions and off 8% from its 52-week highs, up at 43.36 on Monday, October 20th. Looking at gold volatility is continuing to collapse down to 2013 and getting back to that 20 level. So we'll see if it can break through it here today. Your key levels of support are 39.17 and 39.01 with resistance at 40.81 and 4100. The 14-day average true range, which is declining down to $95 a day. And looking at the silver market here, up about 58 cents at 48.51. The high of the overnight session was 48.73, the low 47.78, so about a dollar range overnight. It is down 4 out of the past 5 trading sessions here and off about 9% from its 52-week highs. Your support level on the silver market is rising to 46.03 with that resistance level up at 49.72. I anticipate if we break above that, we could see a run on up to $50. Now the 14-day average true range is continuing to decline down to $1.72. So some big announcements here yesterday with copper and silver is that they joined that revamped U.S. list of critical minerals here. It replaces the 2022 version, and the U.S. added copper and silver and uranium to the government list of critical minerals here, which totals about 60 minerals in total as the Trump administration kind of broadens its scope here as far as what commodities it deems vital to the American economy and also national security. Now, copper imports here, meanwhile, they comprise about half of the U.S. total consumption here, and it comes mostly from countries like Chile, Peru, Canada, and the bulk of the global copper refining is done over in China. So that's one of the data points that we watch on a month-to-month basis. Now, silver's inclusion has been a concern for precious metals traders and manufacturers that rely on the material here, and any tariffs on silver would wreak havoc on the metals markets because the U.S. relies heavily on the imports to meet this domestic demand. That's where you could see that physical squeeze take place in the U.S. market as it was concerns that this tariff on the silver market could take place here. Now we're seeing that we've got these critical lists here in this U.S. list of the minerals. We can get some more clarity as far as how tariffs will impact some of these different products. Now, silver has a wide use of applications. It's used in electronics, solar, medical devices in conjunction here with investment demand. Now you shift to the equity markets because they are edging lower here in early trading here. And it's really caps a week in which there were a lot of concerns about tech valuations. We've had limited economic data with just that one ADP point, and then also the ISM services data, which showed broadening inflation here across that board. Now we got some mixed signals on interest rates, especially from Fed speakers, and really an unclear jobs market. I mean, historically, we should be getting that non-farm payroll number coming out here today, and we're not with the government shutdown. So the S&P 500 futures are down about 0.3%. You look at the NASDAQ, down about 0.5% right now, and the Russell 2000 also down about 0.3%. You look at some other things here with another empty Friday here as far as no labor data here. Really, the Fed commentary is what's drawing the most scrutiny. So what I'm doing here is when we have one of these Fed speakers come out, cranking up the volume here, listening to what they're saying, because you had Austin Goolsbee. He said a lack of inflation data here during the government shutdown makes him uneasy about continuing to cut interest rates. So it seems like a no vote over there. Then that follows Beth Hammack's her caution that high inflation poses a bigger risk here than the weakening jobs market. Then you got John Williams coming out saying that the Fed's near its neutral level. So you can go through the number of different Fed speakers and kind of get a gauge as far as are they looking at cutting rates more or are they not here? So the flows, that's another thing that I look at here as far as the temperament of where we're at here as far as the stock market's concerned. They've been relatively supportive with U.S. equity funds attracting about $19.6 billion for the week of November 5th. That comes from some data from Bank of America, and it's the 8th consecutive week of positive inflows. So I'll go to that CME with Fed Watch tool. And if you don't like that particular tool, you could also go to the poly markets and see where the gambling markets are here. And those are reflecting some close data here to the CME's Fed Watch tool. And the markets see about a 64.9% chance that the Fed will cut rates, and by about 25 basis points at that December meeting. Now I look at the week over week change, and it's up from that 63% a week earlier. So those two central bankers we'll see here at 6 a.m. you're going to have Fed's Jefferson, and then you'll also have at 2 p.m. Central Time, you'll have Fed's Mirren. So we'll speak also on stable coins and monetary policy. Now I'll look at some of these market trends here in the market because of the fact we're seeing a lot of different flows take place in areas of the market. So you look at the dollar index, it's up about 4 here at 99.63, and it's really easing overnight after reaching that 5-month high against a basket of currencies and really matching that August high before breaking down after poking back over that $100 level. Really the euro currency up about 0.1% here is the driving force in this market, along with the Swiss franc edging higher. So you look at the dollar index, it was overbought against the euro, the yen, the pound, and the Canadian dollar. It still continues to weaken here. You look at the 10-year treasury yields, well, they completely collapsed yesterday. Unfortunate the 10-year note couldn't break through that 113 mark, but we'll see what happens here today. You got 10-year treasury yields at 4.10% here, just edging a bit higher. Then you look at the VIX futures, because VIX futures are jumping over that 20 level. We're sitting at 2065 here last, pushing on up about 3% overnight. And really, when you go over that 20 level, it implies a lot of volatility. And that volatility is going to give you opportunities to buy at support and sell at resistance. So you want to remain a little bit more patient. Now the cryptocurrencies, that's just been a bloodbath over here on this side here. And you'll notice that if you do have allocations to Bitcoin, we've taken that pretty much down to the minimum here and just kind of hanging out with it to see how it's going to trade around some of these key psychological levels. So you look at Bitcoin sitting right at that 100,000 mark, down about 1% here, and the volatility continues to surge with an average range of about $4,600. So for Bitcoin futures to break down to 97,000 here today or jump on up to about 104,000 wouldn't be out of the scope of the range of what's based on historically we're seeing over the last 14 days as far as volatility. You go over to Europe and Asia because I like to see what they're doing over there and how are they mirroring or deviating from what's going on in our markets. And you look at the European stocks, they were muted and they're set for a second straight week of declines. You're seeing some outflows there. Remember the German economy, the Greek economy, they're all starting to slide lower. Asia Pacific's countries are not buying a lot of their resources here, and Europe is quite behind the curve here when it comes to AI and AI spending. You look at Asian stocks, well, they fell with the tech-heavy markets here leading the declines here. The MSCI Asia Pacific Index dropped as much as 1.3, and it's set for its worst week since August. So we'll see if our week is going to reflect something similar. Now, on the earnings front, out of the 448 S&P 500 companies that have reported earnings so far, 82% have beat those analyst forecasts and 14% have missed. Now, looking at the flows on as far as the precious metals are concerned, well, we've seen 7 straight days of outflows on the platinum market. We're also seeing the first day of rising against 5 straight days of declines in the palladium market. You get to the gold market, total gold held by ETFs rose 16% this year to 97.1 million ounces, and gold is up about 52% year to date here. The exchange traded funds, they added 50,000 troy ounces of gold in the previous trading session here. And then in the silver market, they're continuing to cut. So on the silver market, we've seen this where the market, it's got to break out over levels in order to get people really chasing and coming in there or have some significant declines. Otherwise, it looks like people are just kind of lightening up, rotating around here, because remember, the money just flows around the system into different resources here. So you look at the silver market, up 14%, essentially unchanged here, and bringing this year's net purchases to 97.6 million ounces. The gold silver ratio back dropping below that 83 to 1, sitting at 82 to 1. And then remember, if you have any questions on futures and option trading, you can always reach out to us, send an email to info@bluelinefutures.com. If you'll have to open up a trading account, we're here for you here. It takes about 5-10 minutes. You can take some allocations to some of these things. What I'll probably end up seeing is people looking at hedging the downside on the U.S. equity markets if we continue to get a significant breakdown there. And also they're trading that copper market around from that 494 level on up to the 506 level. So a lot of trading around these whole numbers here, and the same thing we're seeing around that gold market as well. So you got any questions, again, shoot an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, go get them.